you. What did you think? I mean, obviously we had a lot of stocks trading ex-dividend today, a lot of very big stocks, in fact. Was that more of a factor in the market's falls than what was happening with the Labor leadership?
Well, last week we tested that 200-day moving average, and it does look like we've just pulled away from that, so not breaking it convincingly. And of course, as you mentioned, Bridie, all those stocks trading ex-dividend today, some of the largest stocks in particular sectors. BHP Billiton, the largest stock on our market, also the largest stock in the material space trading ex-dividend. Woodside Petroleum, the largest stock in the energy space trading ex-dividend, and Computershare trading ex-dividend as well, and that's the largest stock in the information technology area. But we also saw the likes of Amcor, Coca-Cola Amatil, AMP, Suncorp Medway, all trading ex-dividend. So that had a big weight on the market. We did see that leadership ballot, and although the market did decline as those results were being announced, it does look like it was more of a coincidence. In fact, the market just viewing commodities at the moment, and oil prices up just under that 110 US cent mark. So a close eye kept on oil because of the impact it can have in terms of global growth. But we also saw gold stocks stalling, and that's despite gold prices being around 1776 US an ounce in Asia. A key reason for that is Newcrest. We saw broker downgrades related to that quarterly production downgrade on Friday. Newcrest down by about 3%. But one thing that was worth noting was the BlueScope One Steel revival that continues on the market. We saw BlueScope up by 3.8% today, and One Steel managing a gain of 7.3%. Now, looking at these two stocks over the last 5 sessions, and BlueScope is up by 13%, and One Steel up by a massive 50% in the last 5 sessions. So the interest in those two stocks continue, but altogether the market looking pretty weak today.
With that whole sector, Beach Energy also out today, and shares really suffered. They were off about 5% at the close. Why was that?
I think with Beach Energy, it was a case of buy on the rumour and sell on the fact, because we have seen such a strong performance in Beach Energy shares. We did see some profit taking coming in today. In fact, if we have a look at the last 52 weeks for Beach Energy, the shares are up a massive 100%. So given that we did see the shares falling just over 5%, not a bad result for Beach Petroleum. In terms of the actual underlying result, the guidance was for $50 million. The company beating its own guidance, coming in at $56.3 million. So the result better than expected. We could potentially see upgrades coming through for this company over the next few months, and that's as they renegotiate some of their royalty contracts. So we're looking at that renegotiation as a possible catalyst for Beach Petroleum. They guided $50 million. They came in at about $56.3 million, but the shares losing 5%. But I think in the whole context of things, the last year has been a fantastic one for Beach Petroleum. In fact, the last 3 months has been a fantastic 3 months for Beach Petroleum as well.
Stock as well, Julia, Billabong, it's rejected the TPG takeover offer of $3 a share. Shares, though, are trading above that today, and certainly Billabong seems to be saying it's worth more. And analysts too seem to, some of the ones we were talking to were saying, look, you know, maybe $4 a share would be more in the ballpark for an offer.
I think $4 a share if you see some of the cyclical factors become a little bit better, so a bit more demand and a bit more confidence being injected into that retailing sector. And I guess that's the whole point of this bid. It is quite opportunistic. It comes at a time when Billabong is looking at some significant cyclical as well as structural issues. And I guess the market's still having some concerns about their retail strategy and also the relevance of their brands. But in terms of Billabong, we've seen some big moves in the underlying business strategy. They're looking at significant cost cutting. The dividend program has been cut down to a 25% dividend payout ratio, with the dividend reinvestment plan being wholly underwritten, and a sale of their Nikon investment, or a stake in that Nikon investment, and store closures up to 22% of their stores being closed as well. So all up, it does look like the market really betting that TPG is going to come back with a higher offer. Their bid was at $3, but today we saw the price of Billabong surpassing that $3 bid offer and closing in at $3.05.
Great to talk to you all.